Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is a free weekly newsletter. Sunday night. Hope you had a great weekend. Market was a mess last week. Quite a bit happened. Basically, IndyMac came out and basically closed their doors, and FDIC had to step in and give people money, which of course caused the financial market to come down, financial stocks to come down and come down hard. And then Paulson came out, and Bernanke came out, and Chris Cox came out. All of them came out basically out at the same time to save the market. And that's something that the Feds can do. They can come in and change rules around in order to change the market. So, I forget what it was, Monday or Tuesday, we basically all got an email saying you can no longer short financial stocks. You can only go long on financial stocks. So what happens if we can't go short? Stocks go up. The real story from last week, this is S&P 500, by the way. The real stock from last week is an XLF, which is the S&P Select Financial Stocks. And you can see 14, market came down, absolutely came down. 15 market open really looked horrible, and that's exactly when all of them started speaking. And as soon as they started speaking and this allowing the shorts, like magic, the market went straight up. It happens, and it's okay. That's I guess that's what regulators are for. I mean, I really wish we had more of a free market where they just let it go and let us, let the market do what the market needs to do. Because I think putting delaying the inevitable just makes it worse sometimes. That's what happened to Japan as well. So the S&P 500 was in a downward channel, and we've been in a downward channel for quite a while, and we marked it for you if you look at our previous newsletters. And we were staying in it, and then we came down when IndyMac came out, and then we came back up. And now we're on the top of the channel. What does that mean? That means that this specific channel is broken. Does that mean that the downtrend is broken? No, the downtrend is not broken. We don't have a bottom yet. Do we have a sign of a possible bottom forming? Yes, we could have a bottom forming. We could have a short-term upside down head and shoulders forming. If we break this level, then you can see an uptrend, possibly. But we don't have it quite yet, and we have to wait for it to see exactly how that's going to play out. I'm not ready to go long. I'm not ready to really back up the truck and load up on the long side. I still think there's quite a bit of momentum on the short side. I'm really be looking for more of a definite bottom, something even on a daily chart that's going to show me that the trend is actually changing to the long side. I mean, you can see over here, for example, on the daily chart, how nice of a top pattern we had. We had head and shoulders with lower tops, break support, beautiful downtrend. What do we have here? We just have a V bottom. That's it. But, even if you look at these V-bottoms that, by the way, were also caused by the Fed stepping in to help out, this was the real buy point. The pullback after them. Why? Because it made a higher bottom, and therefore it made a change of trend to the long side, and that's when you really wanted to buy. Picking bottoms can be very, very painful if the market turns back down. Here's an example. You can see over here that there was a bottom. People try to buy, and then the market collapsed again. You don't want that to happen to you. So you really want to wait for more of a solid bottom in order to really back up the truck and start going long. And I don't think it's quite time yet. And yes, the Fed saved the market, but is it artificial? Is it going to last? Are they going to be able to hold it up? What's the next bank to go belly up? How many banks are going to go belly up? How's that going to affect their system? So, how much ammunition does the Fed have? And of course nobody knows that. So don't get too excited about the long side quite yet. We're gonna wait. We're gonna be patient. We're gonna wait for a solid bottom, and that's when we're gonna back up the truck and load up on the long side. Now, my responsibility is to make people money, but my other responsibility is to preserve people's money. And I think that's more important. I think caution sometimes is more important than profits. And what I've been doing over the last couple of weeks, for example, throughout this whole thing, is I've been advising people to stay out of the market. We closed up all of our shorts somewhere around here, and we started coming out. And when we come out, of course, it's very, very boring because there's nothing going on, and you don't want to go long, you don't want to go short. But it's much, much safer because we saved ourselves all this noise, all of this mess right here by staying out, mainly out. But we're ready to come back in, and frankly, we're looking at the short side still. There's still some stocks that look great on the short side. We have some stocks that look great on the long side as well. The semiconductors look great on the long side. Some of the other techs look really horrible on the short side. Some of the oil services look great on the short side. So, we're starting to nibble at different sectors on the short side and the long side. So we'll have to wait for the complete market turn in order to have a bias to the long side, because we've had a bias to the short side while we were in a downtrend. Let me go back to the daily chart. One more thing that happened last week that I need to talk about, of course, is oil. That's crude oil, yes. Let me look at 60-minute chart. Oil has been absolutely taking a beating, which is great. And that's something that I talked about. If you listen to the newsletter over the last couple of weeks, you will hear that I talked about oil looking very, very toppy, and I thought that the oil was going to come down. And it's coming down, to the biggest point drop in quite a while. And, of course, we were also at the highest prices possible we've ever had. So, big point drop doesn't really mean a whole lot. But I think oil is going to keep dropping. I think people are stepping up and going to start doing something about it. So I think that's very, very good for the market. Anyway, make sure that you are maximizing trends. Go back to the S&P 500. Make sure that you're maximizing trends. Make sure that you know when to come out of the trends and be in cash while the market is moving sideways, while the market is moving while the market is being choppy. Remember, there are a few stages for every market. There's trends, consolidations, and noise. Usually trends are followed by noise. Noise turns into consolidation. Out of consolidation, you get a trend. Back to noise, over to consolidation, back to trend. And right now what we had is a bunch of noise. And now we're going to start having some sort of consolidation. And after the consolidation, we're going to have some kind of a trend. We could have a breakout to the upside. That'll be a good trend. Or we could have a continuation to the short side, which will be another trend. So that's definitely something that you want to watch. That's exactly when you want to trade. Anyway, that's it for me. Have a great week, and I will talk to you next weekend. Take care.